course, are increasingly hearing not just recession, but depression about what might lie in front of us. Alan Blinder is a former vice chair of the Federal Reserve and current economics professor at Princeton University. Great pleasure to have you with us, sir.
Nice to be with you.
Well, let's start with, we heard from the Fed chair today. He said we may well be in recession now. I guess we can all agree that, technically that may well be the case. Just in terms of when you're setting policy, as you have done, when you're in the middle of it, of course, you have to try to gauge the right amount of relief. How do you do that when knowing just how deep and how long this is so hard to guess?
Well, first of all, when you're in the middle of it, it's almost by definition too late. You try to catch these things in the early stages, or even forecast them, which is hard, but recessions usually give you some time. You see warning signals. You see the economy weakening but not contracting, and that gives you a little time to move. The Federal Reserve, like the Bank of Canada, like all the central banks in the industrial world this time around, didn't have any lead time. So you're constantly playing catch-up. And as the metaphor that lots of people have used goes, you're firing every bazooka you can get your hands on.
So when we hear about what lies ahead, there really is this understanding that the Fed is going from being lender of last resort to commercial banker of last resort for the broad economy. Is a massive shift in what the Fed does. Just reflect on that for me for a minute of how important that is, how much of it's necessary, and whether any of it is an overreach.
It is necessary. I don't think it's an overreach. In fact, what I'm worried about is going to have to be an underreach. Let me explain. The Fed is pretty good at solving liquidity problems of large institutions. Now, generally, those are financial institutions, but using the financial institutions as intermediaries, the Fed can help non-financial institutions. So its commercial paper facility, which it did in 2008, which is doing again today, is an example of that. The Fed will not let solvent American companies, big companies, have to close their doors because of a lack of liquidity. When you come now, you mentioned commercial banker to the country. When you come to the small businesses, and I mean small businesses, it is, it is next to impossible for the Federal Reserve to do anything for them directly. What has to happen there is the Federal Reserve and other bank regulators let the banks, the commercial banks, remember in America we have thousands and thousands of them, many of them, most of them very small. Let those banks know that they should keep lending, that not foreclose, not declare delinquencies, and the Federal Reserve will be behind them, and the FDIC will be behind them, and so on. And by behind them, I mean providing those banks with the liquidity if they need it, and also not coming down with a regulatory hammer and saying, you've got an awful lot of bad loans on your books, maybe we should close you down or put restrictions on your activities. That's what you would do for a misbehaving bank in normal times. It's exactly the opposite of what needs to be done today.
Now, I do realize that when your house is on fire, you do not stop and quiz the firemen about what they're about to get up to. Having said that, we've all seen a house after the firemen leave, and it's often destroyed. We are looking at a Fed balance sheet that could go from a record $4.7 trillion to estimates I've seen of up to $10 trillion. What is the cost of that? When do we start to have the conversation about what happens after the fire trucks leave?
Soon. In fact, I think we need to start it before the fire trucks are fully gone, but we're not there yet. The Federal Reserve was just starting, as you may recall, until a few months ago, to shrink its balance sheet from the crisis-induced levels of 2008, well, it was later. It peaked in, I'm forgetting now, 2012 or something. It peaked, and they were starting to shrink it. That's an abject lesson that we probably have time. Nothing terribly urgent is likely to happen. The long-run danger, which some people worry about more than others, but it's a long-run danger, is that a bloated central bank balance sheet like that means a bloated banking system loaded with reserves and consequent use of that central bank money in an inflationary way. So the danger there is of inflation. That seems pretty remote right now and for the near-term future.
You will have seen the shocking number of Americans seeking claims, unemployment benefit claims. The same true in Canada. The numbers expected to rise. We know people will need help. So we know that governments fiscally will also be doing everything that they can. Again, with a cost that we will have to measure later. Just curious, based on what you've seen, it's amazing to say, is $2 trillion enough? But we are asking the question: is it enough? Or are you comfortable that the U.S. government, that the Canadian government, what you see in Europe, are they acting with enough alacrity here?
Given the fractious politics in America and the parliamentary difficulties of running anything through the Senate quickly, I'm as pleased as I can be by this package. That doesn't mean there aren't 12 things wrong with it. You can't get everything right when you're in a mad rush and you have to make political compromises and all sorts of other things. Is it enough? No. It's enough for now. The way you want to think about this is a relief package. The metaphor I'm using in many contexts is we have, because of the virus, we need to call a timeout on economic activity. During that timeout, we don't want people starving, begging on the streets. We have to provide them with money. In some cases, that will mean grants, like to people, these checks that have gotten so much attention.
Yeah.
In some cases, that will mean loans. We were just talking about millions of loans to small businesses. But using the credit of the United States of America, and by the way, Canada has very good credit also, instead of the credit of the households and the small businesses, which is not nearly so good, to hold things together till the timeout is over. The key thing there is to make everything temporary. And that's the way the legislation has been. But there will be more, I am certain.
We aren't here yet, but when we have this conversation about what is needed and the relief that may be necessary, do we start at some point to talk about overall debt relief, a debt jubilee?
I don't think so, but we'll see. I think an overall is a little bit too broad. There will no doubt be specific areas, people, clientele, where debt relief is called for. For example, a lot of people have called for some reductions of student debt, student loan debt. There may be some of that. There will almost certainly be some forgiveness of small business debt, loans to small businesses that will only be partially repaid. When the United States makes massive loans to giant corporations, as it is going to be shortly doing to airlines and Boeing and so on, I can't see a debt jubilee. Those things will be repaid, should be repaid, and I think will be repaid.
All right, it is great to have your thoughts on this. Appreciate it.